Welcome back to America Tonight. Boy, I'll tell you what, a lot of people are looking at, okay, now I'm getting some money back from taxes this year. Yes, there are those people. And we've saved money. And we're thinking about getting a house because of the low interest rates, getting a house that we can maybe flip or rent out. We're not sure. We're going in, they call them syndicates. A lot of people are throwing in syndicates where they just have to put a little bit of money in it. But you're starting to see that more and more. Remember, we went through the foreclosures and whatnot. And we talk about housing as a real indicator, as all of you know here on America Tonight. We talk about housing as a real indicator of where the economy is headed. Mark Bloom is in our virtual green room right now. We spare no expense. I understand he's staring at a beach, so we're doing something right. I don't know. So
definitely, real estate could be worse.
That's right. Oh, I'm sitting here looking at a beach. It's really, really tough. So, Mark, you're in the biz. You're with your company's NetWorth Realty. And is this a good time? Remember that used to be what you did in the 70s. People did that in the 70s. And now here we are, 2012 going into 2013. Is it back to, hey, this is a good thing to get involved with if you can afford to do it?
I mean, my professional opinion is this is, without sounding cliche, a perfect storm. You have low interest rates at an all-time low. We just went through the worst dip in the real estate market as well as the economy for the last 100 years. So not that you can only go up, but the odds and the likelihood of things going up from this point are I think, clear. And for the last 6 months, the numbers have shown that that's going to be the case. So you have rising real estate prices. You have mortgage rates at an all-time low. You have tenancy and rental rates, tenancy at an all-time low, rental rates at an all-time high. So it really makes for a beautiful situation. Additionally, you mentioned it in the beginning, taxes are going to be an issue coming up in the next year or two, and real estate provides a wonderful tax shelter for your income.
Yeah, and we don't think that one's going away, so you're pretty safe with it.
It's a golden cow for sure.
Exactly. When somebody decides, let's say somebody who's never done this before, and they're listening to this conversation we're having, as you called it, the perfect storm, and they want to do this, what would be some tips that you would give to them, things to watch out for when they decide, hey, I'm going to get involved with this, whether I get a couple of friends together or I do it myself? I want to do this, and I'm looking at a couple of different places not far from my own home. What would you tell them to look for?
Well, so first of all, the real estate market locally has become the real estate market nationally. In other words, between the fact that you can travel very easily, the interconnectedness of everyone through internet and smartphones, etc. We have, for instance, our offices are mainly in Texas. We have offices outside of Texas, but the offices in Texas, because Texas has been such a great market, we're getting a lot of investment from people outside of Texas, outside of the United States even. And so I would encourage people to look outside of perhaps their backyard and look for the best investment out there. The reason that we opened a lot of offices in Texas is because it has been such a stable market, and for long-term hold, for rental portfolios, and even for the short-term buy, fix, and sell, stability is key. So look for a stable market. Look for something that has good basic numbers underlying it. And also, don't rely on one person's opinion. I mean, that I think is the biggest thing. If you're dealing with a realtor or if you're dealing with a wholesaler, which is kind of what we do, don't just rely on that person. Ask 2 or 3 other realtors what they think the value is. Ask 2 or 3 other contractors what they think the rehab on the property is, because most investment properties are going to need some rehab. Make sure that you're comfortable with the numbers going into it so that you at least minimize the risk and minimize the chance for any unnecessary surprises.
Yeah, that's great advice. A lot of times do you find that people are buying more than one? Like I used to know a lot of people, for example, they wanted to rent. They didn't want to flip necessarily. They wanted to rent. So they'd have great success and great tenants and everything would be flowing smoothly. And then they made the mistake, Mark, where you would get involved with a lot of other people and they would buy up some properties. And what would happen is they'd have problems with tenants. They'd have to put more money into it, and it became a massive headache. So in other words, it was like they were at the craps table, and suddenly they became flush, and then they got a little bit too confident and got in over their head. Do you see this happening with people too? Well,
we do. So we sell through our company probably 100+ properties in a month. And we see most of our business, obviously, with that kind of volume is going to be repeat customers. We can't go out and find new customers every month. And we encourage people to be conservative. I mean, you have to hedge your bet. You have to have a conservative play in mind because, A, you don't know what's going to happen if a place goes vacant or the air conditioning unit gets stolen while it's vacant, et cetera, et cetera. You can wind up in a glut with a lot of property that isn't cash flowing. Couple good things. Right now, tenants are really easy to come by. So you should be able to keep your places tenanted. As long as they're tenanted, you have money coming in. However, the biggest thing that thinks any investor is fighting off. Do one property at a time over and over and over again until you become so good at it. You have all the cruising license that you can start to go further out. But that's going to take
Right, so biting off more than you can chew. Are you finding, I'm curious, because if people are renting, and of course there's flipping and there's renting, if people are renting, are we still having problems? This is kind of a sidebar thing. We've talked about it on America Tonight a bunch. Are we still having problems with people trying to steal copper?
So, yes and no. I mean, you're always going to have theft, but copper prices have gone down from their peak a bit. And so you have seen that subside a little bit. It's not as rampant as it was. Additionally, a lot of landlords, once their property gets vandalized and or the copper gets stolen, they're going to what's called PEX, which is a plastic PVC alternative. It's not like your typical PVC pipe that you're thinking of. And that obviously will stop any thieves from coming in and taking anything as there is no copper or value there.
Yeah. You talked about Texas being so steady, and that's why it was great for you to open up in Texas and have offices in Texas. But a lot of people look to Florida and see that, okay, maybe things are rebounding, but there's still some great deals. Is that still true, or there's still some great deals in the Sunshine State?
I mean, I love Florida. I still own property in Florida. I think it's an amazing market. Every market, no matter what you're dealing with, is supply-demand. And when you're talking about Florida, you've got water on three sides and basically marsh in the middle. So there's limited supply, and it's in the populated areas mostly built out. I think that I was in Miami or I should say Florida, from 2001, 2000 to, 2006 during the run-up, and things did get carried away. But a lot of the dip in prices that people are seeing is an overreaction to what went on in the mortgage crisis, as well as with investors selling to investors and straw buyers, et cetera. Right now, I think Florida generally is a great play. You can get 15 to 20% capitalization rate on your investment, as well as having a huge upside potential, depending on what your timeline is for your investment. If you've got a 10 or 15-year timeline, huge upside potential. So if you have the cash and or the ability to finance it, I think Florida is a wonderful play.
How do you know when you should flip if you get something in Florida or anyplace else? How do you know when you should just get in there, do what you have to do, and flip it, or when you should rent it? Because you could really mess up if I think there was a program on HGTV, remember, Flip This House, and there's been a couple of them. And I actually love those shows. I would get I would get sucked into that, and you think, oh, this is what I need to do. But then people would see the reality of it, that they couldn't really flip it, and there were problems they didn't know about. I guess you have to be careful, don't you, when you decide what you're doing with a property, because you might not be able to flip it for the big bucks you think you're going to get.
I agree. So buy, fix, and sell, or flipping as we call it, is a much more risky play than buy, fix, and rent. Again, tenants are abundant, and a rental strategy is strictly dependent on a couple of things. You being able to fix that property and you being able to refinance that property. So that's basically your credit and your ability to control that deal. A buy, fix, and sell has to be perfect. That person is going to buy that house. They're going to live in it. It's something that to them has to be absolutely perfect, whereas a rental does not have to be absolutely perfect. So I always tell people, I've never driven around with someone and they've said, man, I still own that house. I wish I had sold it 20 years ago. But often, if not every day, I get, man, I sold that house 20 years ago. I wish I still owned it. I'm a huge proponent of buy, fix, and rent. If you can hold your assets, hold them. The only assets that I would sell, the only houses that I would flip, are those that don't make sense as a rental. A rental strategy, in my opinion, should be your primary strategy. If you're looking for long-term wealth, profitability, cash flow, leverage, et cetera, et cetera.
Yeah. It's interesting, too. And as you say, it's the different levels of investing. It's not, it's not always $1 million homes we're talking about. What's the smallest amount you'll see people invest? Like, in other words, is the house is maybe a $200,000 house? It's not always $1 million house, correct?
No, it's very rarely $1 million house, obviously. Again, supply demand, there's a small market for $1 million houses. However, $100,000 to $200,000 entry-level properties, there's a gigantic market for. So I would say the majority of the houses that we deal with, that we sell to our investors, are going to be valued once they're repaired between $100,000 and $170,000. And if they're not doing that property cash, they might have $15,000 to $20,000 invested in that property. And in some cities, you can get good rental properties that are worth $80,000 to $100,000, and you might have $10,000 invested in that property. So you don't have to be, well-heeled. You don't have to be Warren Buffett. You don't have to be a millionaire to invest in real estate. It's just that it's a non-traditional investment that most people have not been exposed to or educated on.
Yeah.
And that is what NetWorth Realty does, is we educate our investors.
Yeah, very good. Check out the website. It does tell you all about that, networthusa.com, networthrealtyusa.com. Mark Bloom, thanks for coming on America Tonight.
My pleasure. Thank you for having me. You guys have a wonderful evening and a beautiful Christmas.
You too. Thanks, Mark.
Thank you.